Assalamu alaikum friends, welcome to question number 46 business combination. This is an eye opener. Why? Because students always think that group accounting questions like business combination, your associates, subsidiaries, this question can only come under your question number 1 for 30 marks in your section. Yes, it will come, definitely it will come. But even in your section B, as a 25 marks question also, they can test standards like IFRS 3, IS 28, which are your business combination, associates, subsidiaries, all those things. Okay, so this is a very good question for the students to know how, if a group business combination question comes as a 25 marks question, how it will be tested. Because all this while we have been doing group accounting questions, we know how it comes as a 30 marks question. We calculate goodwill, NCI, purchase consideration, find out impairment of goodwill, find the value of the we have been doing this, right? Then we sell subsidiary, we purchase subsidiary, subsidiary becomes associate, associate becomes subsidiary, joint venture. These things we have covered under group accounting question section A. Now we'll see it from the point of 25 marks question. Okay, so part A, they have some transactions. Okay, you have to provide advice. You work for an accountancy firm and you have to give advice to your clients. SEG proposes to account for the purchase of aloo as a business combination. Okay, aloo. We'll see what is it for 7 marks. Second, this is for 8 marks, is quite big. Okay, BIM BIMB proposes to identify lentil as an acquirer in the business combination, but requires advice as to whether this is correct. You need to know who is the acquirer in a business combination, who have acquired the company. Okay, for 8 marks. So, what are the correct treatment you have to advise in the two transactions above based on the IFRS standard. Now, part B, some numbers are given. Okay, let's see this. Here you can see no such numbers are there. It's mostly very less amount of numbers. Some percentages are only given, but for part B, some numbers are given to you. That means you have to calculate also. Discuss and compare. Remember, discuss is one thing, compare is another thing. The impact on the consolidated financial statements of Bolo for the year ended 31st December 2004 if the investment in Kata is accounted for as associate and a subsidiary. How it will, you have to compare and you have to discuss. If it is accounted as a subsidiary, how it will be. If it is accounted as an associate, how it will be, for 8 marks. And 2 professional marks you are getting from here. Professional marks you are getting from the points that you discuss, the quality of your discussion, and the other one is presentation, the way you present. What is the format? Are you putting in subheadings, proper this thing, you are structuring your answer, all those things. Okay, for part B. Now, so it's your choice, you can do it in any way, part B or A. Let's first finish with A. Looks like a lot of work is required in A compared to B, but so I'll finish with A. On 1st of October 2004, SEG, a listed company, purchased 90% of the ordinary shares of Alu. That means it's a subsidiary S. Okay, subsidiary. Alu will cease trading 1 week prior to the share purchase. They ceased trading 1 week before only to the share purchase. Owns a manufacturing facility comprising of land and building. It has land and building as well as related equipment are there. So the fair value of the land and the building is similar to the fair value of the equipment. You see, fair value of the land and building is similar to the fair value of equipment. Acquisition of Alu only gained legal approval on the basis that all employees who worked at the facility are retained. Okay, all employees should be retained. There are no other assets, including any inventories or process transferred as a part of asset. No other assets. Okay, or a process also. There is no process also that is transferred as a part of the cell. You are not transferring any process. And SAG is accounting for this purchase of Alu as a business combination. Remember, when you're purchasing something, it could be two things. Either you're purchasing an asset or you are purchasing a business. If it's a business, you will deal it according to IFRS 3 under IFRS 3. If it's an asset, then relating to the appropriate asset. If it's a tangible asset, non-current asset, then IS 16 intangible asset, then it will be IS 38, financial asset IFRS 9, lease asset IFRS 16. So depending on the type of asset, mostly they will give you easy things like IS 16, assets under IS 16, like land and buildings and all. Okay, but there are some facts and certain conditions are there which will help you to decide whether it's a business or a asset. If you have gone through IFRS 3 properly, business combination, what is the meaning of business combination, you will understand this better. But if you haven't gone through, I would recommend you to go through the standard first, because this could be a little bit tricky. This question is not very straightforward. I mean, it's not easy to understand. Very rarely students understand this type of questions. If it was a calculation on the other hand, yes, it's very easy. For 7 marks, that means we'll see the marking scheme. Go to the marking scheme. Let's see. See the marking scheme. It is 1 mark per point. So we don't know what are the points. Okay. Here you can see some calculations are there. So part B is easier. So it's easier to get the professional marks there. Part A, we don't have any professional marks. You see the answer also is quite big. It's lengthy. Okay. SAG and ALO. 7 marks. Just okay. Tutorial note is just for understanding purpose. That means what they are doing, they are telling you beforehand. It is not a part of an answer. So the question is, indirectly the examiner is asking you whether it is a business combination or an asset accusation. First you have to answer that question. If it's a business, how you have to account for it. If it's an asset, how do you account for it? This is more of a knowledge than your application to the case study. Okay, this requires knowledge. You need to know what is business and you need to know what is an asset. Asset is easy, but what is business? This definition of business is given in IFRS 3. So you have to be good in your IFRS 3. Normally, the good thing is, since you know that IFRS 3, group accounting, it will come under group accounting questions, right? In your question number 1. So students are they are very prepared for this standard. So that's a good thing because it will help you in your this question also. If you are well prepared with the theory part also, like what is the meaning of business under IFRS 3? What is the definition of business under IFRS 3? If you have studied it while you are studying group accounting, so automatically you don't have to study it again. Understanding? You have studied it once and it will help you in different questions. You can use it in this answer also. Question number, the section B question. So that's a good thing. That's a positive sign. So even though you know that this question, you are not sure whether this question will come as a 25 marks question or not, but at least you are very sure that in your question number 1 you're going to get group accounting. Hence IFRS 3 definitely you are going to get in your question number 1. So you will anyway study IFRS 3, right? So that's a good thing. Now first start with the definition. What is the meaning of the business, and then tell in the case study relate. Okay, there are some tests. Remember, if you went through IFRS 3 my lecture, you will know what I'm talking about. There are some tests that you need to apply to see whether it is a business or not. Okay, first what should you do? You have to first start by saying whether it's a business or not. If it's not a business, don't start with the asset. Don't try to prove it's an asset. First try to prove whether it's a business or not. If it's not a business, then we'll say it's an asset. Then no need to prove that it's not an asset. If it's not a business, means it's an asset. Definitely. But if it's a business, no need to say that it will be an asset. Then it's a business, then you will use the rule of IFRS 3 only. So before I take you through the answer, first point, prove that it's a business or it's not a business. Anything is fine. Then we'll go down. If it's a business, no need to see whether it's an asset or not. But if it's not a business, then it's an asset for sure. Okay. And if it's an asset, mind you, things are very easier if it's an asset. Because then you recognize it as an asset under IS 16, then you depreciate, then it's very easy. But if it's a business, right? As you can see here, then you need to do more things. More things are required. But most of the time, this is not the universal truth that it will be a business only. From my experience and the questions that I've seen, most of the time they give a scenario that it's a business. More than asset, it's a business. It's proven that it's a business most of the time. Okay. So yeah. Now IFRS 3. Start with IFRS 3. Don't start with IS 16 asset first. You always have to start with IFRS 3 only when it's about whether a business or an asset. So IFRS 3 defines a business as what? This you can memorize this definition. Okay. Integrated set of activities and assets that can be managed to provide goods or services, generate investment income through which you can get income such as dividend or interest, or generate other income from ordinary activities. Integrated set. See the word integrated set. This word will be there. Integrated set of that means activities are not. It's not one activity separate from the other. They are integrated. They are part of a process. You need first activity to take place, finish, complete before second activity can be started. They're integrated. If it's affecting in one place, it will affect the other place also. It's like a process. Okay. And the assets that you are having, okay, basically through those assets you are providing goods and services. That is the definition of business. Or if you are holding it for an investment purpose, those assets you can generate investment income also. You can invest interest and dividend also through those. Okay. Or generate other income also from ordinary activities. So to meet this definition, this is about accusation, whether we have acquired a business or an asset. So to meet this definition, the accusation must compromise. Compromise what? See, 1 mark you will get for here only. Definition of an asset. Sorry, definition of business. 1 mark. Okay. The accusation must compromise input and process that significantly contribute to the ability to turn this inputs into output. Remember, there should be a process. They have to have input. Okay, that means accusation. When you're acquiring, you should acquire inputs as well as process, because through this process only you can turn input into output. You have to mention input, process, output. These three things needs to be mentioned in your answer when we are talking IFRS 3 and business, because I have explained this also. Okay, when you're acquiring, you have to acquire input as well as process, because through that process you can convert it into output. So to qualify as a business, outputs are not required. Outputs are not required to qualify as a business. You need inputs and process only. These two things I will highlight it. Input and process to qualify as a business. Outputs are not required. Okay. So 7 marks here. Okay. So the board has introduced an optional. Now another mark you will get is for the optional concentration test. This is the test I was talking about. You have to mention this test in your answer. Because through this test, what are you trying to say? That it's not a business. It's shocking, right? That usually we try to test something to say it is a business. No. In this case, we are trying to say it's not a business. That's why we are doing an optional concentration test. Okay? It's optional, first of all. Concentration. We are concentrating. We are seeing how concentrated the value of the assets are. That's why the name comes optional concentration test. This will help the entities to help them to decide whether the accusation is not a business. Not a business. Please mention not a business. Don't say this test is conducted to conclude that the accusation is a business. No. Now, tell what is concentration test. Define. So the concentration test is this are purely knowledge which is replicated here. If you see your textbook also, you will see the same sentence, same lines, because still we didn't we didn't apply this to the case study. It will be down here only, down towards. So the concentration test is met if substantially all of the fair value of total assets acquired is concentrated in a single identifiable asset or a group of similar identifiable assets. What does it mean? concentration test is met means, what is the meaning of concentration test is met? That means it's not a business. In other words, you are saying it's an asset. Okay, in other words, you are proving that it's an asset. If it's not proven that it's an asset, that means it's a business automatically, right? So concentration test is met when the fair value of the total asset that you have acquired is concentrated in one single asset, the fair value. That means let's say you have 5 assets. Asset 1, 2, 3. Okay, let's say 3 assets you have. Okay, and if you add the total fair value. Okay, so the fair value of this total asset that you have acquired is concentrated in one single asset. You see, most of the fair value, the total of the fair value, most of it, the amount is allocated to one particular asset. Then it is not a business. Then you have purchased an asset. Understood? Now you have to tell whether this optional concentration test is met or not. So another mark for that, 3 marks till now. So in this case, the optional concentration test is not met. Okay, it is not met. This you can write in a different paragraph also, that it is not met. Why? Because the fair value of the total asset acquired is split between land and building and equipment. It is split. Clearly the case study mentioned, it is not in one particular asset only. That fair value of the total is split between 2 assets. So these are different classes of PP. Okay, concentration test is not met. What does it mean? What does it mean? That it is not a business, or it's a business? Are not met. The optional concentration test, that means the fair value is split. There are different classes of PPE. Confusing? It's okay. I'll go down and see a little bit later. You will come to disclose what is it. So as such, SEC must engage in a more detailed assessment of whether they constitute a business or not. So through this, what are you understanding? It is not met. Not met means till now it's a business. Till now it's a business. Why? Because if the optional concentration is met means it's not a business. But if it's not met means it is a business. Opposite. So in this case, it is not met means it's a business until this point. But remember, just having the optional concentration test is not enough. You need to do whether they have the input and the process also. They have acquired input and process also. If that is also acquired, then it's a business. Understood? So as such, they must engage in a more detailed assessment. You see, more detailed assessment they have to do. That input and process is known as more detailed assessment only, because at this point it's not clear. It is a business. It looks like it's a business. So we are going to go for more detailed assessment of whether ALU constitutes a business or not. Now we'll see whether it's a business or not. Earlier we were checking whether it's not a business. But according to the optional concentration test, it's a business. Now we'll see more. Again, it's a business or not. So they do not currently produce output. They acquired process and okay. The acquired process are therefore only substantive if there's a knowledgeable and experienced workforce able to convert the input into output. That means you need someone to convert that input into output. Okay. Although such a workforce has been transferred, in the absence of inventory, there because they told there's no inventory or intellectual property, this workforce is incapable of producing output. You cannot produce output if there is no inventory or intellectual property. So as such, the purchase of ALU does not constitute a business combination, and so the proposed treatment is incorrect. It's incorrect because they told it's a business combination. They have right? So you will get the remaining 4 marks here only for applying it to the case study. Understood? See from here. There are no assets, okay? Then there is no process that is transferred as a part of a sale. So they have purchased an asset. So the proposed statement is incorrect. Telling this much is enough. Why? Because say propose to account for the purchase of this one as a business combination. You just have to say whether it's correct or not. That this one they have acquired as a business combination. So it's incorrect. Okay. Now we are coming to the second one. This is regarding acquirer. That they have taken this one as an acquirer. Lentil. Whether lentil is an acquirer or not. That means more than one party is given to you, the information is given to you, you have to decide who is the correct acquirer, whether it is lentil or someone else. So on 1st of September 2004, BIMPI, a listed bank, and entered business combination with another listed bank, Lentil. The business combination had taken place in 2 stages which were contingent upon each other. On 1st of September, they acquired 45%. That means no control. It's an associate. Of share capital and voting rights of Lentil for cash. On 1st of November 2004, Lentil merged with BIMPI and BIMPI issued new A shares to Lentil shareholders for their 55% interest. On 1st of August 2004, BIMPI had a market value of 70 million. Lentil had a market value of 90 million. BIMPI's business represents 45% and Lentil's business represents 55% of the total value of the combined business. After the transaction, the former shareholders, excluding those of Lentil, owned 51%. And former shareholders of Lentil owned 49%. The COO, Chief Operating Officer of Lentil, is the biggest individual owner of the combined company with 25% interest, and the purchase agreement provides for a board of 6 directors for the combined entity, 5 of whom will be former board members of BIMI with 1 seat. Reserve. Wait. The purchase agreement will be a former board members of BIMPI with 1 seat reserved for a former board member of Lentil. Out of 6, 1 will be for the former board member of Lentil and the other 5 are from BIMPI. Okay. The board of directors nominates the members of the management team. The management compromise CEO and 4 other members. 2 from BIMPI, 2 from Lentil. Under the terms of purchase agreement, CEO of Lentil is the CEO of the combined entity also. So whether he is the acquirer or not, there should be certain characteristics in an acquirer to say that he's an acquirer of a business combination. So you again have to say whether this is correct or not for 8 marks. Okay. You need to use 2 standards here. One is IFRS 3, the other one is IFRS 10. Remember that acquirer in a business combination entity that exercise control, and this control is explained in IFRS 10. Understood? Someone who has a control only you can say he's an acquirer. Otherwise you cannot say he's an acquirer. So looking at the case study, it's a bit confusing because 50 less than what do I say? 50%, number one. But there are some other information also to say whether they exercise control or not, even though it's less than 50%. That you have to explain in your answer. Okay, we'll see the answer. So it's quite lengthy, It's big enough. Anyway, let's break down this. So IFRS 3 requires an acquirer to be identified in all business. See, whenever business combination takes place, you have to identify who is the acquirer. You need to know this. So who is an acquirer? That has control over the combined entity. Okay. Now we are linking IFRS 10 with this. 1 mark for this. So we are giving a definition of control. That means investor controls an investee when it has exposed or has a right to variable returns from his involvement with the investee and has the ability to affect those returns. One is they have the right to return, and the other one is they can affect those returns through their power over the investee. Sometimes it's very easy to or straightforward for you to see that this person is having a power by looking at what at the voting rights. Okay, so one by one you have to give from the case study point to say whether they have a power or a control or anything like that. So starting with the voting right. Okay, when the parent acquires more than half of the voting right of the entity, it normally has power. Okay, more than half of the voting right is acquired by the whom? By parent company. Then you can say yes, this entity has the power. Okay, so this is another 1 mark you will get for saying the vote, linking this to the vote to assess the power with the vote. Then there's a presumption that entity achieves control over an identity by acquiring more than one half of the voting right. It's a presumption that you can achieve control if you are having more than one half of the voting right, unless it could be demonstrated that such ownership does not constitute control. So there's a presumption. In more complicated scenarios like the one in this question, IFRS 3 sets out further rules. Okay, this is a complicated scenario, it's not easy. So for this questions like this, IFRS 3 sets further rules to, to say who is the acquirer. You may struggle to remember the rules off by heart. Examiner knows that. So if this is the case, then use your common sense. Use your common sense. For example, which company issued equity in the transaction? Which company is the bigger of the two? Which company seems to control the other? As always, try and reach a justified conclusion. So try to answer this question and reach your conclusion if you cannot remember the rules of IFRS 10 or 3 by heart. Okay. So till now, 3 marks you have achieved out of 8 marks. If the guidance does not clearly indicate which of the following is the acquirer according to IFRS 10, then the indicator listed in IFRS 3 should be considered. Okay. If through IFRS 10 you cannot say who is having the control over whom, then use the rule from IFRS 3. Now we are linking this to the case study. Who is the acquirer? We are giving the properties of the acquirer. The acquirer is the one who transfers cash or other assets. The one who is giving the cash. Because to buy someone, they have to give cash. That means cash is being transferred from them to the acquiree. So the acquirer is the one who transfers cash, or it could be some other assets also maybe they are giving. For example, it could be shares that they are giving to purchase that. So in this scenario, we'll see whether BIMPI is the one who is giving the cash or not. So BIMPI is the entity that is giving up the cash amount. Okay, corresponding to what? 45% of the purchase price. Because 45% they are buying, so 45% of the purchase price. This represents a significant share. It's a significant share of the total purchase consideration. So 1 mark here. Okay, let's say how many marks? 4 marks. Out of 8, 4 marks are gone. Now, what about equity interest? When there's an exchange of equity interest, that was about cash amount, the earlier paragraph. Now we are talking about equity, when you're exchanging equity. So when there's an exchange of equity interest in a business combination, that means you are sharing, giving some of your equity to purchase the equity interest in another entity. The entity which issues this equity interest is normally the acquirer, the one who have issued that equity interest. In this case, the majority of the purchase consideration is settled in equity instruments, if you see. So BMI would be appear to be the acquirer. In this case also, BMI is likely to be the acquirer. Another mark for this. Because if you see, purchase consideration could be settled in equity instrument also, it could be settled in terms of cash also. In this case, majority it is settled in equity instruments. Let's see again. Okay. Okay. They didn't give the amount of the cash, so yeah. In terms of equity, they're giving that after this thing, they're having this much of shares and all those things. So 1, 2, 3, 5 marks are gone now. So the acquirer again, the acquirer is usually the combining entity whose shareholder retain or receive the largest proportion of the voting right. Whoever is having the largest voting Rights of the combined company is the acquirer. Another mark for this. Okay. So who is having the majority of it? It is Bimbi, because Bimbi is having 51% of the voting right compared to Lentil, who is only having 49%. Okay. Even though initially Bimbi had the lower, okay, but the smaller, who is the smaller of the two combining entities, but then later they have obtained the control because more than 50%, 51% of the voting rights Bimbi is having. Because after the transaction, it increased to 51% from 45%. Okay. But a controlling ownership does not necessarily mean that the entity has the power to govern the entity's financial and operating policy. Just having that ownership, controlling ownership, does not give them the power to govern or the entity's financials and the operating policy. Remember that. Okay. Financial policy, operating policy, you cannot govern it. Does not give you that power. So you need those powers also to say that yes. This another mark here. So acquirer would be deemed to be the entity whose owners have the ability. That means you will see whose owners have the ability to appoint or remove a majority of the members of the governing body of the combined entity. The one who can appoint or remove the members in the board, he is the acquirer. So if you see, 5 out of 6 is from Bimbi and only 1 is from the Landy. So this also suggests that Bimbi is the acquirer. Now, here also you will get marks. This are also extra marks you will get here. See, for each paragraph is 1 point. This is how you will know how many points we have written. So if you see in all the cases, it is Bimbi. We'll see more. So if, sorry, the additional, they could be deemed the entity whose form of management dominates. Whose form of management dominates the management of the combined entity, that also can be taken as an acquirer. We'll see whether it is again Bimbi or not. So in this case, management team consists of what? 2 former employees from Lentil and 2 former of Bimbi. It's hard to say in this condition because both are equal. But the former management of Lentil has a greater representation. Even though the board is the one who nominates the management team, but the CEO will have a significant influence through his share ownership in the selection of the team. Now, IFRS 3, what does IFRS 3 says? Also says, so these are extra, additional points. Already you have written 8 points if you see, count. They say that acquirer is often the larger entity. Whoever is the larger entity is normally taken as an acquirer. So we'll see the fair value. Fair value of Lentil is 90, whereas Bimbi is only 70. This would suggest Lentil is the acquirer. Now this is a contrasting information, right? Something which is against what we have been going through. All this while it was Bimbi, now Lentil based on the size of the entity. Okay. So the arguments supporting Bimbi or Lentil as the acquirer are finely balanced. They are finely balanced, and therefore it is difficult to identify an acquirer in this case. Sometimes it's difficult. It's not straightforward. Sometimes you know, okay, this person is more. So in this case, it is more difficult to say because it's finely balanced. The arguments supporting both Bimbi and Lentil are balanced more or less. But looking at what you have written above, it could be argued that Bimbi can be identified as an acquirer. Why? On the basis of these 3 things. Finally, it's like you're summarizing. You will not get additional points for this because these points you've already explained. This is just your summarizing at the end. Okay. Looking at the equity interest, that they have 51%, whereas they have Bimbi is the entity that is transferring cash. This is like a summary you are giving at the end. And they have a marginal controlling interest 51%. Sorry, he issued the equity interest in this case, and here it is the size. So looking at this 3 information, Bimbi could be identified as an acquirer. You need to finally write one company. You cannot just leave it, okay, no acquirer can be found. You cannot leave your answer like that. At least one you have to identify. Bimbi or until you have to say in your answer. Okay. Even if you look above also, more information is saying, most of the time it is saying it is Bimbi. Whereas for lentil is only one thing or two things is given. One is the size on the board, 2 and the other one is this 90 and 70. So this two information is saying lentil, the others are saying it's BMP. So some of you might write it the other way around. You might say, yes, it's correct, lentil is the acquirer. That is also okay. You will get your marks if you can justify. Okay. You can say yes based on the size, the large entity is lentil, or based on the number of the person on the board. But that one is balanced. That's hard. 2. Now we are coming to part B for kata. Okay. We haven't read this information, so we need to read the calculations. On first, they purchase 45% associate. But as I told you, when you have to write for theory, normally when it's for calculation, yes. But in this question, they have asked whether if you take it as a subsidiary, what would be the difference, and if you take it as an associate, what would be the impact. Okay, so sometimes they will give you more information to say, even if it's 45%, based on percentage, yes, it's an associate, but they might have some power, some control, some voting rights, something is there through which you can say it's an associate, a subsidiary, right? Consideration was 3 million, carrying amount of net asset 2.4, and it's equate to their fair values also, and they have given you PPE, inventory, share capital, retained earnings, loans. Directors are unsure whether to treat this as an associate or a subsidiary. Okay, they measure NCI using the proportion of net asset method. This should be something very easy. Okay, because it's mostly calculation. Because you have enough calculation information to calculate the impact that consolidating this or using the equity method would have on the consolidated financial statements. Equity method, if it's an associate, consolidate when it's a subsidiary. So you basically have to show the impact of this on the consolidated financial statements. You have enough information. Now, how you're presenting it, you have to present it like this. You see, workings will be given at the end. So for presenting workings like this separately, you will be getting marks. One professional mark you will get. And workings, I would suggest you to do it in Excel. And then copy paste in the Word if you feel like. So start with the subsidiary. Okay, if it is accounted for subsidiary, what is the impact? Number one, assets, liabilities, income, expenses, all this four will be consolidated in full. Because subsidiary, consolidate. And for subsidiary, you recognize goodwill also. That goodwill you have to calculate. That's why you have to show it as working one. Always next to something when you have calculated under working, right? Mention the number of the working. For example, goodwill is this, working one in bracket. Goodwill will be recognized. Number 3 is for how many marks, by the way? See, 8 plus to 10 marks. Okay. Group would recognize its share. Subsidiary, so they will recognize their share of, the group will recognize their share of post-acquisition retained earnings. And what is the amount? You have to calculate. So basically you tell one thing and write the amount. And they will recognize their NCI also. And you have to calculate. I will go to the calculation later. I'm just finishing the main thing, how it will be accounted for. If it's an associate, it's more easy. Okay. You have to find out the carrying amount of that associate at the year end. Okay, that will be taken as an associate, and in the statement of profit and loss, the group would show its share of their profit. Okay, the group share of the associate's profit in the statement of profit and loss that you have to calculate and show. Now you have to compare the impact. Okay, before compare the impact, you have to calculate, remember. So how are you going to show the impact? One on the asset, one on the liability, one on the profit or loss. Okay, and then these are the 3 areas. Assets, liabilities, profit and loss. Assets and liabilities already they are in the statement of financial position. They will be shown in the statement of financial position only, and then profit and loss. Okay. So, wait, are you going to collect the 8 marks? Tell me. 2 marks for each. 2 marks for each. 1 mark for accounting of subsidiary. 1 mark for the calculation of subsidiary. 2 marks. 1 for associate. How do you account for associate? 1 for again the calculation. 2 marks. So 4 marks are already gone by. And comparison of impact on assets, liabilities, profit and loss. 1 mark each. 1. How many? Total 7 marks and another 1 mark, right? For all these workings. The calculation might be, more 1 more. 2 marks maybe you can give. So 2 for subsidiary, 2 for associate, 2 for comparison of impact and 2 for the workings. Total 8 marks. Okay. Now we'll go through the workings. Consideration 3 million given. Remember the formula for goodwill. NCI accusation. They told proportionate share. Fair value is not given. So you have purchased 45%. That means NCI will be 55%. It's incorrect. I mean, we don't do it normally. But let's see, because they told take it as an associate and subsidiary and compare. So we are taking it. At 50% at this one, the amount of net asset is 2.4. Take it. And net asset is 2.4. This from here only you can take it. Right? Deduct. Goodwill is 1.92. Okay. So you see here, you recognize goodwill 1.92. Okay. And when you are taking the post acquisition return earnings, how are you taking? You need to go here. Return earning is 2 here. Okay. Yeah, return earning is 2. Wait, something is not right. Okay, we have to find out that net asset. Okay. So first we'll finish all the workings. Working 1 is goodwill. Always start with goodwill. It's better to follow this order. NCI. NCI accusation is 1.32. How do you get this 1.32? Go up and see here. Already you have calculated here. NCI post acquisition net asset. 3 minus 2.4. How are you going to get the net asset? It is simply, okay, you take your consideration and you take your net asset. Consideration minus net asset. Okay. So deduct it and take 55%. That is your this thing. Share of profit. Okay, because this is profit only. You are 2.4 million worth of net asset, but you are paying 3 million. Just wait. Okay, post acquisition net asset 3 minus 2.4. On that 55% you're finding out. Take this 1.65. This is your net asset. And investment in associate cost 3 million. Okay, and group. Wait, just give me a minute. Same answer could be obtained by taking the group share of the post acquisition movement in the associate net assets equivalent to the movement in the share capital. Okay, it is equivalent to movement in the share capital and retained earnings. Okay, so if you see here, this also will be same. Investment in associate, it's taken from here, the group share of this thing, because this is 45% for associate and 2 minus 2.4 minus 1. We'll see this. This needs to be understood. Wait, just give me a minute. Yes, 1.65 million. We got the NCI. 0.24. This will be same. But the thing is, how did they get that? This 45% because group shares 45%. 2 minus 2.4 minus 1. Okay, the share capital is 1. And the carrying amount of net asset they told is 2.4. So this 2.4 you minus 1 from here because the difference you want to show the increase, and 2 minus this amount, 2.4 minus 1 from retained earnings, because share capital will be 1. Okay, that will be same, there's no change in share capital, and it will be 2.4 net asset. So I hope you're understanding that part. Okay, 2.4 minus 1, you deduct it from 2 to get the post acquisition profit. Okay, and take 45%. Same for associate also, it will be 0.27 only. Okay, it will be 0.27 in both the cases, because associate is 45% and NCI also if we take 45%. Sorry, the parent share. Now you compare. Don't just calculate figure. Make sure that you explain and compare also, because you are told to compare. Start with asset. So if you consolidate their asset under subsidiary, it will lead to higher asset. Why? Because you are consolidating. So it will lead to higher non-current asset than if equity method was used. Why? Because when you're consolidating, you are putting goodwill also under that, and then you are consolidating definitely. But associate you don't consolidate and no goodwill. So how? PP is 14 million. Okay, from your statement financial position given to you, and goodwill. This goodwill also now it will increase. Compared with an investment of associate is only 3.27 million. Show it in terms of figure, you have to compare. Okay, say that this will be higher and how it will be higher, show it. So this will make the group look more asset rich, which will help it to raise finance in the future. You have to discuss also. It will look them that they're having more asset. That means it's very easy for them to raise finance in the future. It will help them. Then consolidating their large PP balance may have detrimental impact also on their non-current asset turnover. So if you write answers like this, okay, this is something beyond what you are asked from. You will get your professional marks. Okay, the drawbacks. One advantage you told, okay, it will look like more asset rich. But what about the drawback? If you consolidate large PP balance, it would have an impact on another ratio, that is your non-current asset turnover, thus making the group look more less efficient at generating profit. That means they are holding huge amount of non-current asset without generating profit. Now liabilities. So when you consolidate loans, when it's a subsidiary, you might be consolidating loan. This will have a negative impact on the group's gearing ratio. Okay, that means this will have an effect of making the group look riskier than if equity method was used. Okay, and higher gearing ratio is not a good thing, because it will make it harder for the group to raise finance in the future. Now coming to profit and loss. Same, income and expenses you're consolidating line by line. So this will have an impact on key profit or loss figures such as revenue, gross profit, profit from operation. 3 figures. So increased revenue will make the group's market share look more impressive also, because now your revenue also will be increased. CATA is profitable, right? So when you consolidate, already you can go and look at the figure. It is profitable. So if you consolidate its result, it will improve the group's profit from operation. This may have a positive impact on the investor perception. So something like this. This is you are increasing the quality of the discussion. You are telling them what could be the impact of the investor. So if you discuss it in this way, through this angle, you will get more points. That means professional marks you can easily get. You have a chance of getting the 2 professional marks. This is how you get your professional marks, rather than just directly saying, okay, this will have an impact on the profit, this will go up, this will go down, that's it. You are adding more insight into it. Okay. Okay. But if they use equity method, the group will just show their share of their profit as a single line below profit from operation, because you are telling the difference, no? So this would therefore have no impact, positive or negative, in the group's operating profit. It will not have an impact because you are showing this single line below the profit from operation. So for operating profit will not have any impact, whether positive or negative. And then these are the workings. Okay. So here when you're taking net asset, the consideration minus the net asset, the post acquisition net asset, when you want to know, just deduct and find the this thing. And what else? That's it. So see you in the next question. Until then, take care.